Welcome everyone to another A-Team broadcast here live on X and YouTube. These are kind of a new thing. They're going over pretty well for us with the products and protocols that we've been featuring. And so we've been sticking to this format and everybody enjoys it. And plus it gives us a chance to sort of showcase the protocols themselves via the live stream with me sharing my screen without trying to dox my birth certificate and everything else that goes along with that. So we're excited today because the A-Team is joined with Brave New DeFi from Nexus Mutual. So welcome, Brave New DeFi. Glad to have you on, sir.
Yeah, good to be here. Happy to join.
Thank you very much. We'll go ahead and kind of do some intros here. I always like to showcase the members of the A-Team that are on the stream here. So I'm K-Mets. I'm joining from the Protocol FX account here. And then joining me as well is DeFi Advisor. How are you, sir?
I'm good. How are you? Nice to be on. Thanks for hosting, man, as usual.
Happy to do it. And then also joining is Crypto Profit. How are you, sir?
Hey, hello guys. I'm bullish as always.
I don't think we've ever seen Crypto Profit in a bearish mood. He's always pretty bullish, which is good.
That's why he is the veteran here. I guess.
Look, like if it's not correct, then I can see the future, and if it's correct, then life is great.
It's a win every time. Fantastic. And then also our newest member of the A-Team, man, it's an honor to have this guy in the crew, is Cyril. How are you, Cyril?
Hey, I'm good. Very happy to be here. Excited about this, I believe, second space I do with officially in the A-Team. So happy to be here.
Well, you've taken the IQ level here on the A-Team much higher, man.
Thank you.
At least on my side.
We're definitely in triple digits now. Yeah, definitely in triple digits. Well, I tell you what, we'll go ahead and dive into it now because Brave New DeFi has been gracious enough to join us for the better part of this hour. So Brave New DeFi, can you tell us a little bit about yourself? Just a brief intro on your background, how you got into crypto, how you came into DeFi, and or if you even want to consider what you're doing in DeFi, and then how you found yourself at Nexus. Would love to hear your story.
Yeah, I'm Brave New DeFi. Just for a little bit of background, I work within the Nexus DAO as the head of community. I do quite a few things within the DAO, but most notably, I serve on the product and risk team. So I help manage new protocol cover listings, and I also contribute to new product development within the mutual. But like I said, I wear quite a few hats. I've been with the mutual for almost 3 years now. I first got into DeFi in 2020. I think it was around mid 2020. I had one of my friends that was talking to me about Bitcoin, and he gave me a little bit of a different pitch than most people give, talking about blockchain technology. He was just saying that, this is this decentralized ledger. There's a lot of things you can do. It can improve efficiencies. It can, create more transparency with things. It's just like a better system for some of the things that people are building. And he kind of started with the foundation in Bitcoin. It wasn't too long after that of doing some research, I got into looking at Ethereum, and then I got into DeFi, and I very quickly went down the rabbit hole there and just, I think for most people, DeFi is an obsession. It's not really like an occupation or a career. It's just like a rabbit obsession. So I spend a lot of time thinking about DeFi in my day-to-day life and everything. So it's weird when you go out in the world and people talk about things. And they're like, well, what about that Doge? And you're like, yeah, I don't know. What about that giant thing on Blast? Do you know what that is? And they're like, no. It's like, oh, well, sorry. I don't have as much to talk to you about as you probably have to talk to me about. But yeah, so that's kind of where I got involved. I was really fascinated by the things that MakerDAO was doing, fascinated with a lot of things. And when I first got into DeFi, I wanted to look and find, like, what are some interesting sectors within DeFi? What are some interesting markets? And where did I see, like, the greatest need? Like, what was underserved? And after reading about some of the, the big hacks and big happenings, in 2020, I saw that there was just this, like, drastic need for on-chain coverage, some kind of like insurance or insurance alternative to protect people against those risks. And I came across Nexus Mutual the way a lot of people come across a lot of things through a DeFi Dad video. And then I just started contributing. I saw some stuff that could be improved in the docs. I started working on the docs and helping out there, and it kind of soon cycled up pretty quickly. I helped out with a bunch of things, and I was one of the first people to kind of propose a structure for the Nexus Mutual DAO for how teams can contribute and how to onboard more people to contribute within the DAO, within the mutual. So that's my background. I've been working as head of community, like I said, for 3 years, and doing quite a few things. But my biggest focus has always been trying to make it safer within DeFi and to make protection more accessible, so that people aren't negatively impacted when hacks happen and people lose money. I've been involved in all but 2 of the mutual's claim events, and I always enjoy it the most when I can help people. Usually having some of the worst experiences of their life, losing a large amount of money, helping them go through the claims process, get their claim payment, and kind of getting things back to normal, and recovering from what is otherwise a pretty traumatic experience. So I think that's my background in a nutshell.
That is, it's funny because my background in terms of getting into DeFi is very similar. It's just sort of this slow, sort of like kind of like gradual, just getting sucked in, and it's just like, hey, can you help us out maybe? Or you see something and you start suggesting things, and then the next thing you know, you're like, how did I get wrapped into hosting this stream with Nexus Mutual and all these strangers that I don't know with cartoon profiles in the middle of a workday? And it's a lot of fun. Like you say, it's an obsession. It just sort of grows, and it sounds like you're just like everybody else here in this space. You found a niche. You see the possibilities and the opportunities, and just kind of jumping at it. And sounds like it's going well if you've been there for 3 years, and been a very positive experience overall then.
Yeah, it has. I think a lot has changed within DeFi over that 3-year period. So it's always neat to see things evolve over different cycles. Of course, risk always evolves, and there's always new risks to look at. So and for years, I've spent a lot of my time just looking at new protocols, looking at things as they come up, like doing research on some new and emerging risks. And that's always fascinating. There's just a lot of brilliant people working within DeFi and building very cool things. So there's always something to keep me busy.
Yeah, for sure. Absolutely. It's funny. I was actually thinking about that today, about how DeFi is changing so much. It's almost difficult to, we always talk about when roadmap and when can we see the roadmap and everything, but things are so flexible and changing so quickly that oftentimes it's difficult to formulate much more out than a couple of months. But I would imagine that with managing risk, that's always ever present in DeFi. However, I'm sure the risk and the type of risk is always changing. So maybe this is sort of a good segue into what's Nexus, and how can it save me from North Korean hackers and blast bridges?
Good luck.
So talking about Nexus Mutual. Nexus Mutual is a discretionary mutual that's built on Ethereum, where people can join as members. They can share risk with one another, buy cover. There's quite a few different things that you can do within the mutual. But the core thing is you can join, and a lot of people join to be able to buy cover. Anybody within the mutual can underwrite cover. They can stake an XM and either stake it themselves and manage risk, or they can delegate their NXM to a pool manager who can allocate it and underwrite cover with it. And then when people buy cover, if you're underwriting risk, you earn NXM rewards in proportion to the amount of cover that's being purchased. So it truly is a mutual model that's run by members. It's not insurance. It's an insurance-like product. So it is discretionary cover. The difference being that it's on-chain. Insurance is heavily regulated in different ways all over the world. But with a discretionary mutual model, it's a community-centric model for coverage where you join, you pay a small membership fee to join, and then you can share risk. You can contribute to the capital pool and mint NXM. You can use that NXM to participate in governance. You can underwrite risk. You can buy cover. There's quite a few things that you can do within the mutual. So we've been around since 2019, and things have changed. When we first started, we had smart contract cover, which was more limited. It went through different iterations as different things happened. We've paid out for, 7 to 9 events. Some of them have been relatively small claims, but we've paid out for some very large claims. To date, members have approved and paid out more than 18 million in claims to people who have suffered a loss, either to a loss within a DeFi protocol or due to halted withdrawals in a centralized exchange. So some of the biggest claim payouts that we had were for FTX last year, for the Euler hack for Rare Capital, but we've also covered like the big Cream hack that happened in 2021, some cases of economic design failure, and the very first hack that we ever paid out for was on BZX in February of 2020. So we've kind of run the gamut. We have a lot of information about claims and our claims history in our docs as well. But we offer a variety of cover products now. So smart contract cover is now protocol cover. It's been upgraded. It's more comprehensive. It includes coverage for smart contract hacks or exploits. It also includes coverage for oracle failure or manipulation, severe liquidation failure, and then any losses due to governance takeovers where somebody upgrades a contract and is able to steal funds. So we offer that protocol cover, and we just launched bundled protocol cover, which you can buy one cover for coverage along multiple protocols. For example, we've listed FX protocol cover. We also have a bundled protocol cover that we just launched this week, which if somebody is in the earn market and they're LPing with FX USD, they can buy a bundled coverage, which is going to cover you for FX protocol smart contracts as well as Curve and Convex smart contracts if you're depositing and earning through Convex. So with bundled protocol cover, we're trying to make things a little bit easier for people who are buying coverage. We have quite a few other things in development in the mix that we'll be releasing here in the next quarter or two. But for things, we also have other people building on top of us, like Sherlock and OpenCover. With Sherlock, we underwrite a portion of the risk that they're underwriting through our quota share cover. And we also underwrite ETH slashing cover for Liquid Collective, which is a liquid staking protocol focused on growing institutional adoption of ETH staking. And we underwrite coverage in the real world through our deal with the Retail Mutual. So they're a discretionary mutual in the UK that provides protection for a little more than 5,000 retail shop owners. So we basically underwrite what is a discretionary version of reinsurance for them to offset some of the risk. So we have quite a few different products where we're working on more, just trying to cover people wherever there's a lack of capital in traditional markets or underwrite risk where we have the expertise and there's not really anybody else underwriting that risk in traditional or on-chain markets, to be frank. So we're doing quite a bit, but I think the biggest thing is working to make protection more accessible across a variety of markets.
Awesome. If I may, I have a question. I don't want to interrupt your schedule, K-Mets, but
yeah, go ahead.
Yeah, how do you choose whether you integrate or not a protocol? How does it work? What's the process to integrate a new protocol to cover it?
To add a new protocol cover listing.
Yeah.
So right now, the product and risk team, which I'm on, we review new protocols. We do just like a standard due diligence check. We look through things. Some of the things that we don't cover with protocol cover are rug pulls. We don't cover certain things, so we look just to make sure a project is legitimate. We also look at a project's audit history. We look through to see if they're a fork of another protocol. We look through and see kind of what the security practices are, what the protocol is, what kind of complexity is there, and then we'll go through and we'll do add a listing. For newer protocols that don't have like less than a couple million in TVL, there's also a demand factor for is anyone going to underwrite it if we list it. So the way a listing works is we put the listing up, and then there are staking pool managers within the Nexus Mutual ecosystem that choose to stake, allocate capital, open up capacity, and then they set pricing for a given product. So it's not like one set fixed pricing for everything. Each pool underwrites using their own, pricing methodology and their own actuarial models to set pricing for different products. So if we list something where there's not much demand, people just won't underwrite it, and then it's just there. So that's the process for a listing. I spend a lot of time looking for new and emerging protocols to add to listings so that we can just have the most listings available and underwrite risk where people want to buy protection. So a little bit is seeking out new protocols, and a little bit is when people come to us with requests, we always do a due diligence check, review that, and then if it passes our basic due diligence, then we'll list that and then let the staking pool managers take it from there.
Okay, that's very interesting. And as I can see, it's about 6% per year to get covered on FX, and we can get about 100% APY. So that's a pretty good risk reward. I mean, you take the risk off and you still get about 90% yield. That's very interesting. Is that page only for the FX protocol, right?
This is just for FX protocol. If you go back to the buy cover menu and then you toggle on the bundled cover. So if you go toward the top, you'll see a toggle for bundled cover.
Okay.
You toggle that, and then you can go to the FX bundle on there. You can see that one. That one, I think, is a couple percent higher, but it's got all three of those smart contracts in there. So if you're farming through Convex, that's what you'll see. This was just listed too, so I'm not sure if this includes the min pricing, but you can always look at the staking pools to see what people are underwriting it as. If people come through and buy a lot of cover, we have dynamic pricing, which is going to push the price of cover up, and then it decays down over time. That just prevents there being, some large risk factor where people pile in to buy cover that we're not basically mispricing risk. That kind of helps control supply and demand, but it also pushes cover buys across different staking pools to spread risk around as well.
Awesome. Brave New DeFi, can I ask you, how do you guys at Nexus price these? How can you it seems like a very complex process of really deciding what's the proper price that can actually fit all sides, right?
Yeah. So pricing in V1 was a bit simpler to answer. Pricing in V2 is basically that's whatever staking pool managers want to underwrite the risk at. If you look on the staking page, there's 20 some staking pool managers now. I run my own staking pool. I know the foundation has a staking pool. Ease runs a couple staking pools. I know Hugh has a personal staking pool. So there's quite a few different people that are running staking pools within the mutual, and they're all setting things based on their own risk criteria. Some people have publicly shared their pricing methodology. Ease has a pretty good entry on the forum about how they view risk and how they price risk. So it's all dependent on whether or not somebody wants to share that information. But when I'm looking at something, when I set my pricing, I look, how battle tested is it? Is it newer? Then pricing will be a little bit higher. Have there been audits? I look through at the quality of the code. Usually look through at the team and just some of the social factors as well. But I go through and, the more complex something is, the more chances there are for something to go wrong as well. So, looking at how many lines of code, looking at the audit history, looking through some of these things. I will say my one personal caveat is if something is a compound V2 fork, I'm either not going to underwrite it or it's going to be very expensive, because that's been one of the most exploited protocols, because people fork things and they don't know what they're doing. So that's always something that puts my guard up when I'm looking at something. But yeah, so what I'll say about pricing is it varies based on the pool manager. So that's one of the benefits of having different risk managers coming in and underwriting cover, because they all bring a slightly different pricing methodology with them. But you'll see there is essentially this price discovery where if no one's buying cover at a certain price, people tend to lower the pricing a bit until there's that product market fit. And then if there's a lot of cover buys coming through, you basically know that you can adjust the pricing a bit. So price discovery within the mutual is possible thanks to dynamic pricing.
Man, your pool is you are one of us, sir. This is pretty fabulous to see, and super interesting. I'm kind of blown away.
Nice.
Is this all on chain, or is any of it off chain, or?
Oh no, it's all on chain.
Okay, wow.
How much is there now? Like how much money is actually like currently covered? Maybe you can say it.
How much active cover do we have?
Yeah.
I'd have to check. We have a Dune, so we have a bunch of Dune dashboards for this stuff too. If you're curious, we have covers one,
sure.
claims one, quite a few. But if I look at our Dune dashboard as of yesterday, 49 million in active cover. I'll run the query right now just to see what it is. But I believe year to date, I just ran the numbers earlier this week. We've sold $61 million worth of coverage year to date, and the mutual has generated 385,000 in premiums, but that doesn't include the investment earnings that we've also generated within the mutual, because we have a capital pool that's primarily ETH denominated. We hold quite a bit of ST ETH and then Rocket Pool ETH in there as well, and there's a smaller portion allocated to ETH staked through Kiln as well. So
that's so cool. Can your local insurance company do this, gentlemen? I
mean, that's one of the benefits. Everything's on chain, so you can look at our assets and liabilities. You can look at how much money's in the capital pool. You can look at our claims history from a variety of things. You can look at things on chain. You can look at them through the claims Dune dashboard, and then I have on the DAO site, I have like a claims archive where you can go through, and I've basically summarized from all the discussions why claims assessors approved something or why they denied it, and everything. So I think there's like 5 or 6 different ways to look and review at our past claim history.
Is the main customer of this DeFi DAOs, or is it just individuals, or do you guys have like a target market for these products?
Well, that depends on what the product is. What we've seen a lot of is we've seen a lot of funds that are deploying capital on chain. They want to be able to buy cover. It's usually a mandate for some. For others, they just, they're happy to earn yield on chain, but they do need something to cover them against smart contract risk because they're just not as knowledgeable about it as they are about other things. So we have a lot of larger funds that are buying cover. We also have, smaller retail users that are buying cover as well. We have open cover, which is built on top of the mutual, and they make Nexus Mutual cover accessible on L2s like Base, Arbitrum, and Optimism. So you can buy cover through them, low transaction fees, and you can buy the protection, and then they back that with protection on mainnet as well. So we have a pretty wide variety of people buying cover. When it comes to quota share cover, we're seeing, like in the case of the retail mutual or Sherlock, we're seeing different audiences there, but it's typically people who are underwriting risk elsewhere, and they have a capital pool, but they have more demand for cover than they currently have capital. So they offset a portion of their risk onto the mutual. We help them expand coverage, protect more people, and we kind of help expand their reach with our capital pool as well. So working with different people on that end. On ETH slashing, we've worked with a few different people there. The Liquid Collective has been our longest and largest partner. So if you hold Liquid Collective's LST that has native protection built into it through Nexus Mutual. So the audience depends on the product. For protocol cover, primarily funds, higher net worth individuals, and now retail users, now that open cover is live on L2s.
Wow. This is kind of mind-blowing.
I agree. It is really cool. Yeah, but I think this kind of goes back to like what the mutual's mission is, right? And for years, we've been focused on creating products to make DeFi a safer place to earn and transact, by offering really comprehensive coverage that covers the biggest risks in DeFi. The things that we cover are the things that we can verify through the claims process. For things like a rug pull, it's usually social engineering. It's something that you can't really cover because you can't verify whether or not something, is a rug pull. A lot of times a rug pull is just somebody taking money, right? And that's not really the failure of a smart contract. It's just the failure of a trust because there were permissions in a protocol that should have been there in the first place. So, we can't cover front ends because we can't audit them. We can't see into those. We can't verify, if that's legitimate or not. Somebody could spin up like a clone front end and drain people's funds through that way. So the only things that we're limited to that we can't really cover are things that we can't verify through the claims process. But last year we launched our V2 and that kind of changed things. It changed the way that we price risk. It changed the way that people can build on top of us. We weren't as composable before, but we're much more composable now. And so now people have the ability to build risk management businesses on chain. So, our mission is transformed a bit. It's a bit broader now. So we've transformed the mutual into this infrastructure layer for risk management on chain. Like I said, we've seen Sherlock and OpenCover building on top of us. Ease has been building on top of us for a while as well. We have more, distributors and staking pool managers coming on board. There's a lot happening on the product development side. So we're now focused on creating risk management infrastructure on chain where anybody can take the risk expertise, build a business, distribute cover, and improve access to protection across markets, whether they're on-chain markets or kind of a hybrid of on-chain and off-chain. This could be crypto native smart contract risk. This could be liability risk for Web3 companies. There's quite a lot of flexibility with Nexus Mutual V2, and there's a lot that can be done there. So we're going to be building out some other things too this year that I can't say anything about now, but I'm going to be excited to announce more incentives for people to build on top of the mutual.
This is really cool. It kind of reminds me of Morpho, what Morpho did for the lending market, but it's kind of the Morpho of covering, like, I know you don't want to call this insurance, but Morpho of covering risks.
Yeah, in a very similar way that we have the infrastructure and people can build on top of it, where Morpho has Morpho Blue, which is the more complex market that's not as easy to interact with. So you have the experts that set up the markets within Morpho Blue, and then you have Metamorpho built on top. They have vaults. There are clear ways to deposit, and that's the most friendly way for people to interact with Morpho Blue is to go through the Metamorpho layer. So very similar. That's how you can think of OpenCover. OpenCover, you buy cover. It's just all it is buying cover. It's not all the other stuff. It's not underwriting risk. It's a very simple interface. You go there to get protection. There's a lot of things that people can build like that on top of the mutual. We're working to make it easier to integrate. So if somebody wants to offer protocol cover right within their front end, that they can have like an easy 1 or 2 click integration. So somebody right when they're depositing can select, I want to buy coverage, and they can do that right in one spot without having to go into a separate D app.
This is really cool. And
go ahead, Cyril. Go ahead.
Okay. I saw that the maximum coverage for FX protocol is about $1.5 million. How does it work if, let's say, someone wants to be covered for more, or is there a way, if I don't know, if it's getting almost taken, that this limit gets how do you say, goes upper? At some point. How does it work? Who decides?
So this again, this comes back to the staking pool managers, right? So a lot of times when we list something new, there'll be about maybe 1 or 2 million in capacity that'll open up for something. But staking pool managers have a finite amount of capital, and they're going to allocate it to places where they think they can get the best risk versus reward. So they'll underwrite things if people are going to buy cover for it. But over time, if no one's buying cover, then they kind of reallocate. So if somebody wants to come through and let's say they want to buy 3 million in cover for FX protocol, what they can do is they can drop into Discord. They can reach out to us through our contact form. I am in touch with all of the staking pool managers. We're working on building something that's just right in the UI. So if there's not enough capacity, you can request it and it'll go right to the staking pool managers directly. So, you don't need to go through an intermediary. That connection will kind of just be through our front end.
Okay.
But you can request that, and then I usually reach out to the staking pool managers and let them know. And then if somebody's going to buy cover, it's usually within a matter of hours that more capacity can open up. But it's usually just there's a limited amount of capacity when something starts. As it gains traction, more capacity opens up. And then if there's somebody has a need, they can just reach out to us, and then I can coordinate with the different staking pool managers who are underwriting protocol cover risks.
That is awesome, because I've been in touch with liquidity managers or for DAOs and so on, and in order to tell them about FX protocol, but most of them are kind of conservative with the liquidity they manage. And when they see such a new protocol as FX, even if they can feel that it's safe, they won't always take the risk of allocating part of their liquidity. But having Nexus Mutual on top of our strategies, it's just awesome. And especially if we can raise this limit over time, that's really cool, because it can just help them feeling more comfortable exploiting our yield strategies. And I mean, paying 8% when you make 100% a year, it's just a no-brainer.
Yeah, and I mean, especially like for this is like a perfect use case for bundle protocol cover. If you're putting a large amount of funds, if you're managing, funds from a DAO treasury, if you're managing, different strategies, what you want is the most amount of coverage for the lowest price. That's always what people who are buying cover want. So for bundle protocol cover, you just buy that one coverage. You can farm, if you're earning 100%, paying somewhere between 7 and 8% really isn't that bad. You're going to get protection across, 3 smart contract layers. So really, if you look at it per protocol, it's coming out somewhere between, 2 to 2.5% for each protocol coverage, which is a little bit more comprehensive, or it's better priced than you're going to get if you have to buy them all individually. So it helps out on gas fees. But that's what we see a lot of with funds, right? I think different fund managers like Kropatkin and Token Logic, these different treasury management firms working on chain, this can kind of help them expand beyond just some very conservative portfolio management strategies to branch out. They can still offset that smart contract risk, buy coverage, and then still earn, and put funds into some of these protocols where they may be newer, they may have, good practices in place, but nobody wants to put $10 million into something if there's a potential chance they could lose it. And that's kind of where Nexus Mutual comes in. That's why we exist.
That's cool. Really cool.
Crypto Prophet, I know that you were really interested to see, a schedule Nexus Mutual. I'm curious if you've looked into a product similar to this, and just sort of like what the appeal is for sort of your average DeFi user, degen. If you can kind of just your perspective, just as somebody who's been around the block a couple of times, I'm sure this is an enticing product.
Yeah, I think it's really cool. Personally, I'm quite familiar with Nexus for I think about 2 years now. But on the other hand, I kind of wanted to ask about this. It's kind of like the one of its kind that I know. I don't really know of any competitors really on chain that are like meaningful. And I was wondering if this is indeed the case. And also with the BlackRock fund coming online on Ethereum recently, the 100 million that was deposited. If you saw it, probably it was big news. And the ETF, I wonder if how the pool managers think about maybe customizing their offering in the future, or maybe even looking at some of that institutional insuring, you could say, because I do think, if I understand it correctly, that it works kind of with fragmented liquidity, you could say, and I'm curious how it all fits together towards the future, basically.
Yes. So I think quite a few things to cover there. I think I think there was an original question at the beginning, and then we went over to BlackRock.
Yeah,
and
sorry,
everything.
my bad.
Yeah.
Maybe split it in 2 if you want, or in 3 or something.
Yeah, so I'll start with the BlackRock question, and then I'll have you refresh my memory on a couple of the other ones, and I'll move through those as well. For institutions, we already have like funds and institutions that are buying cover. Funds deploying with like the magnitude of, let's say, BlackRock. BlackRock is going to have different mandates. They're going to have different requirements. So I think if I were BlackRock, I'm assuming what they would do is they would try and find coverage in traditional markets for smart contract risk. I'm not exactly sure how they're planning on deploying funds, if they're going to deploy into DeFi, what they're going to do there. That being said, I think if they look, they're going to find that there's not a whole lot available that is offered at a decent price in traditional markets because people don't have the same risk expertise about DeFi. They're not as deep in the weeds on this. And I've talked to quite a few people. I mean, I think most everyone is aware that like Moody's and S&P are active looking at ratings for on-chain things. S&P has done a lot of work on stablecoins and risk frameworks around there. But when I've talked with the people before from S&P in recent years, they've basically said, we have all of this like risk framework for everything except for like the smart contract layer. Like we don't really know how to dig into that or where to start because as I broke down to them, it's not just smart contract risk. There's the governance risk, depending on how a protocol is set up. There's a lot of different layers to look at. And so it's not like uniform across everything. It really depends on the protocol and what you're looking at. So there's not a lot of people that have that risk expertise that are underwriting risk on or off chain. So I think over time, as people come, they will want more bespoke products. They will want different offerings. And again, that's kind of the beauty of the setup in Nexus Mutual V2 is people can come and build businesses that offer bespoke coverage for something. People can come through and they can build a full stack business from staking pool up to distribution, and they can kind of have their own white label product if they want built on top of the mutual. That's important because with what we have within Nexus, I guess you could look at the staking pools as fragmenting liquidity, but everybody has NXM that they put within those pools, and that NXM correlates to capital within our capital pool. So because we're not splitting up the capital across different chains like other people have, they've taken that path where they're underwriting risk and they have a capital pool on each chain. So you're fragmenting liquidity when you're doing that. If you keep it all in one spot, you can have a more capital efficient approach, just like a traditional insurance company does, where you're underwriting more risk than you have capital, but you're managing risk so that one loss event isn't going to wipe out the whole pool. So when you do this, you're bringing in more premiums, you're growing the capital pool, the investment earnings that we have within the capital pool help grow the capital pool and then offset any future claims that are paid out. And then you get to scale so that as the capital pool grows, the amount of cover that you can underwrite grows as well. So as risk in the marketplace changes and develops, businesses can emerge. They can underwrite these different products. They can cater to the BlackRocks of the world. They can also cater to the crypto natives that need a different product than, let's say, your BlackRock or financial advisors managing people's money in traditional markets. So I think that's where the mutual fits in there. I know you had asked about competitors. There have been ones that have come across the board. When I first got involved, there was Cover Protocol. They went by the wayside a couple of years ago. We had Unslashed, which Unslashed, I don't know if they currently underwrite cover. Last I checked, they were kind of in not in a dispute, but they're basically working with Celsius as they go through their bankruptcy about capital that they have in their Spartan bucket. So last I checked, there wasn't a lot going on with Unslashed. InsureAce is still underwriting cover, but they have a much smaller capital pool. So no one has the amount of underwriting capital that the mutual has, and no one is underwriting capital at the same size that the mutual is currently. We've seen other models pop up like parametric insurance on chain. And these things haven't quite taken off because, there is this balance when you're offering an insurance-like product is it has to cover enough risks so that when people buy it, they feel they're getting some value out of it. But it also can't just be so much risk that the people providing capital on the underside that are underwriting feel like they're taking on a lot of risk for not enough money. So you always have to find that balance. What I've
Yeah.
seen personally with parametric coverage is people can buy the coverage, and then like in the case of Terra, when that collapsed and UST depegged, we never underwrote that risk, but there were some parametric providers that did. What they were able to do is they were able to buy cover. They didn't have UST. They bought it at a steep discount, and then they swapped it for a payout. So this becomes an incredibly cheap put option for UST, and so people profited from that. When you're underwriting risk, that's not really the purpose of you underwriting risk, right? You're there to make people
Yeah.
whole if they suffer a loss. There are options markets for some of these other things that you can use to hedge. But with that, then it becomes very hard to attract capital to underwrite those risks. So while there's been a lot of different experimentation on chain, I think the mutual staying power is kind of tried and true since we're still around and we still have a very large capital pool.
Yeah, that's actually you answered all three of my questions basically perfectly, to be honest. And maybe to sum it up, it's like, yes, institutions are bullish. Yes, we are basically the most relevant player in this space right now in DeFi. And also, yes, TradFi doesn't really know how to come and compete with us in the near future because there's so much, how do you say it, custom knowledge in blockchain or smart contracts. Or is this a bit like the state of Nexus? Because this sounds bullish to me.
Yeah, I mean, there's like I said, there's a lot of people. I really enjoyed working with the Sherlock team. They have this very deep knowledge. They're looking at new protocols all the time. So, they're underwriting their own risk and they're taking on things. It's been really great to watch them grow and expand over time. Just talking with a lot of different risk experts, there's a lot of people looking at and managing risk within DeFi, but things change quite a bit. It's always interesting to ask the average person. I always have to ask people, what are you doing in DeFi? And what risks are you most worried about? And it's always interesting because people have very different answers. I know we had talked about what coverage do degens buy, but real degens don't buy cover, right?
Yeah.
They deploy capital across 200 protocols. But if you have a job, there's no way you can do that because that's like a full-time occupation. You'll see some of those wallets on DBank or something, and they're like there's like 20 chains, all of these protocols. Some of them you can see have gone to zero. Some of them are like way up, and it's just, as somebody who's very deep into crypto, I just don't know how you would do that and have anything.
Stop doxing me, bro. Stop dox.
I've seen this one today. He upvoted a vote I did on DBank, and so I checked his wallet because it was a huge wallet. And this guy has had positions in every protocols I knew, even protocols I don't know. It's just I don't know how he manages this. Maybe he has a company with employees. I don't know. It's just crazy. It's called Anon. If you want to check Anon with a 0, it's crazy.
Yeah, there's all kinds of crazy ones. I mean, even I think just going back to the premise of like blockchain and stuff is you can look at anyone's wallet and just see what they're doing, right? And you don't know who it is, but you'll find some of these wallets and you're like, oh my God, like who is doing this? This is crazy. Because again, it's like all of these different things, but you can also find funds on chain and kind of like see what they're doing as well. And it's very interesting. Tools like DBank and Zerion and stuff are just really great for surfing around and finding some of these accounts. But yeah, what DBank's built has been really interesting because people build like a personality or like a social portfolio around their actual capital and what they're doing. So that's been pretty neat to see as well.
That's right.
Go ahead, Cyril.
No, I was just saying I realized that I don't have FXN on my public portfolio, so I should definitely correct that.
You see the loyalty of this guy. Like you see how you see how much is into the A team and Aladdin. Honestly, what a blessing to have you on, Cyril. And I mean that. I know I sound like I'm saying it like I'm joking, but I actually mean it. And really think you brought like an amazing new energy and perspective to the DAO. Blessed to work with you. I want to ask you, Brave, a bit about is the only thing that the mutual is currently covering, is it strictly for DeFi? Because if I may, I want to ask you about a specific product that I'm familiar with from years ago, to be honest, which was one of the ones that got me very curious about insurance, because I have to say that in general, like I'm very curious as to how much how much is the industry even ripe for really scaling the whole insurance side of things. I actually think we're getting to the point where the insurance sector is going to become very, very interesting. And I'm kind of curious about stuff that are not strictly DeFi related. For example, there's a protocol called EtherRisk, Decentralized Insurance Protocol. I don't know if you're familiar with it.
Yes.
Yeah. So they talk about covering some stuff from real life using crypto instruments. Is it something that the mutual is also discussing or thinking about, or is your vision currently limited just for DeFi products?
So yes, so EtherRisk is a very cool product. It's been around just as long as Nexus has. And their approach is that they are regulated insurance and they underwrite certain risks. They focus on a lot of parametric coverage for weather derivatives. So if there's not enough rainfall in certain areas, that farmers can buy coverage, and there are different parametric triggers that will trigger a payout. They've done flight delay insurance. They've done quite a few things. On the Nexus side, like I said, we started with protocol cover or smart contract cover that turned into protocol cover. We've focused a lot on on-chain crypto native risks. But with V2, we've started to branch out and look at other areas where we can underwrite risk, because now we have the infrastructure to do so. And like I said before, one of the first ones that we've done is discretionary reinsurance for the retail mutual, which is a discretionary mutual operating in the UK and the real world. So we have branched out into those areas. There are opportunities for other people to come and build businesses and underwrite risks in traditional markets. There's a significant amount of opportunity for that, whether it's cyber risk that people want to underwrite. There is a pretty dire lack of underwriting capital for cyber risk. There are a lot of traditional markets that lack underwriting capital for some of these risks, where they basically need reinsurance to be able to expand their capacity. They have the demand, they just don't have enough capital to underwrite these risks. So there is a lot of potential for that. And, with Nexus, we do have the infrastructure and the foundation for people to come and build those businesses and underwrite those risks. So it's absolutely something that people can do within the mutual. And it's something that we are focused on as well.
Wow, that's going to be so cool, honestly, because, insurance, I think that when we just think of insurance within DeFi, as huge as it can be, and also it can reach magnitudes which are far beyond what I think most people are even imagining right now. But insurance is such a huge, it's one of the biggest industries in the world probably, and there are so many other use cases potential for growth that really I think it puts the mutual in a very interesting situation. And what can I say? Not financial advice, but definitely something that when I think about it, I should be considering a bit more personally with my investments. I mean, of course.
Yeah, there is a lot. I would say for anybody that's curious about what we're working on, in the next 6 months, we do have our roadmap that's up on the Nexus Mutual forum. So, we try to detail every 6 months. Every 6 months, I put together a refresher, talk about the progress we've made, the things that we focused on, if we, didn't progress on certain things, kind of the reasoning for that and where it fits into the pipeline. But we've put out a roadmap here in December of what we're focused on for the next 6 months. It breaks down, what each team is focused on, what the higher level goals are. Our main goals are just to grow cover sales. And so there's a lot of different priorities there for us on how to grow cover sales, how to offer more transparency and continue on with progressive decentralization within the mutual, and how to go through, we did a big revamp of our tokenomics here in the last year, how to kind of continue on to optimize for some other scenarios within the mutual. So there is quite a bit of stuff. We keep up to date with that. I will say that we'll probably have an update to this roadmap either ahead of the 6 month mark or sometime in July. There'll be another big update here on what we do. You can see I have the toggle menus on everything just so it's not overwhelming to look at all of the stuff, but there's quite a bit of detail and quite a bit of stuff in there. So if you open up any one of the toggle menus, you can kind of see what the priorities are for individual teams. But yeah, like the BD and the engineering team are pretty chunky. On the community side, we have quite a few priorities in there. We've delivered on 2 of 7, and then I think we have like 4 that are in flux that we're working on at the moment and everything. And we're working on technical documentation for the protocol to kind of increase that ahead of more people building on top of us. So yeah, I always try and provide the most information as possible to people so they can kind of see where we're at. I think my view is whenever you write long stuff, no one ever reads it, but there are some people that read it, and that's who I write for, these big updates.
This is incredible. This is when people ask for a roadmap, this should be like the benchmark in my opinion. This is incredible.
Yeah, amazing stuff, man. You're diligent.
Yeah, I always wonder how many people actually read it, but it's important to have it out there for anybody that's curious.
Man, I think more and more people are gonna read it, and especially with something like insurance, it all has to look like very official and like I don't know, tradition. I don't know exactly how to say it in English, but it all has to look like, okay, this is a serious business. This is not like you can't afford to just look like the normal altcoin and just have like a semi-composed roadmap. And it definitely seems like something. What can I tell you? You're making me more and more curious about the mutual, actually. And I'm also like wondering about like I don't know. Maybe we talked about it and I didn't notice. Like, how does the investors or like holders of NXM, are they earning from whatever the mutual is earning? Like, what's the business model and how does someone invest within NXM if you think you guys have a good model over there?
Yeah, so I'll start with the first one. How do NXM holders benefit? So the goal is to grow the capital pool over time. When someone buys cover, 50% of that is allocated to the capital pool, and 50% of it, all of it goes to the capital pool, but 50% of the value of a cover buy is minted as NXM, and then that goes to people who are underwriting the risks. So people that participate in the mutual can increase their ownership within the mutual, and NXM you can think of as ownership within the mutual. Some people have proportionally more. They use it to underwrite risk. They use it to vote in governance. You can stake capital and assess claims if you have that experience. And all of this is if you participate in the mutual and help run the mutual, you get rewards for doing that. But if you just hold NXM and you don't participate in anything, there's still going to be value accrual to the capital pool over time based on cover sales and based on the investment earnings for the pool's float that gets invested. So right now it's around 55% of the mutual's capital pool is earning staked ETH yields. And so I think when I looked at it on my own personal interest was just looking at how much if you're just holding an XM do you earn, and it's a little over 2% is the value accrual in ETH terms over time if you're just holding NXM based on investment returns for ST ETH, RETH, and then the staked ETH through Kiln. But if you participate and underwrite risk, of course, there's risks that if there is a claim payout that gets approved, then if you're underwriting risk, then you're going to have a portion of your NXM burn. Of course, it's going to be shared across all the people underwriting that risk. And but you can earn NXM rewards for doing that. Like I said, I manage my own staking pool. And right now, the variable APY in my pool is around 15% because I've sold a decent amount of cover. I don't have as much capital as some of the other pool managers, but so I'm earning the 2% underlying and then about 15%. And NXM is basically backed primarily by ETH. So by holding NXM, you have exposure to ETH underneath. So I'm earning roughly 15, 17% on my ETH. That's the way I look at it anyways, from my personal perspective.
Wow. And how is it like distributed? Like you're getting it in like what token?
You get you get the rewards for staking in the NXM token.
Okay.
So because all the capital pool sits, all of the capital that flows in sits within the capital pool, you get paid in NXM. But then if you want to, you can redeem your NXM for ETH in the capital pool.
Man, that's so cool. Kemet, we're so used to think about that in crypto we can own the bank. We weren't thinking about the fact that we can own the insurance company as well.
It's pretty incredible, isn't it? I mean, it just shows you know, a lot of times you sort of get, it's easy to sort of get a little bit jaded in DeFi because you're like, okay, well, we're just going to suck liquidity out of this thing and stick it into this other thing, and it's just a race for this liquidity. And then you take a step back and you look at something like Nexus, and you're like, wow, I forget how much other stuff is built on top of just DeFi itself, or can be built on top of it. And this is just, this is this is a framework, right? I mean, it's something that it can handle DeFi, and it's just the ability to purchase this cover on chain. It's pretty easy to see the direction that we're all headed, and it's pretty amazing. Sort of basically not just what Nexus has done, but really the level of detail and composability that it has with it. It's pretty amazing. So I've had my jaw on the floor this whole this whole interview, just because I'm just sort of amazed at the product, and it's really nice to sort of peek your head out from just dealing with the liquidity pools and stable coins and whatnot, and kind of see some other broader aspects of DeFi. Brave New DeFi, we're kind of getting towards the end of our hour here, so I kind of want to make sure that I give you basically a platform to discuss anything that we haven't brought up so far, and that's usually my cue for if you want to give out some alpha or anything, you're more than welcome to now at this point in the broadcast.
Yeah, I think what I'll say on the Nexus side is there's a lot of stuff in the pipeline. There are things I wish I could share, but things that aren't quite final yet. So I'll have to hold back on that. But we're going to be working on a lot more bundled protocol cover listings. So keep an eye out for that. Like I always tell people, if there's something that you want to buy cover for, if there's something that we don't cover that you're interested in, just reach out. You could shoot me a message on Twitter. You can drop into our Discord. Every listing request that comes through, I always check. We always discuss. We're working with a lot of different people. We just announced today that we're partnering with EtherFi to cover their liquid vaults with bundled cover. We'll have more info out about that. Trying to stay on like the cutting edge of like new protocols being launched, new primitives. But what I will say is it is very interesting. The mutual is more complicated than your average protocol. So what I like Maker, for example, Maker is this like beast, right? It's this massive complex protocol. But at the end of the day, people know I can take DAI and I can put it in the savings DAI vaults. I can hold S DAI and then number go up, right? That's a lot of DeFi is as easy as I put money here, number go up. But with the mutual, it's a lot more complex and not quite as tangible. So getting that message across is a little bit more complicated. So I'm glad that you all find it very interesting. What I do on a weekly basis, there's a lot of admin stuff. There's a lot of like the unglamorous stuff that everybody has to do within their job. But a lot of it is like me sleuthing around and looking for, different things on chain, looking at DeFi protocols. And I get to look at all the cool stuff that people are building, just like you guys are building at FX. All of these people are building, within the new on-chain primitives. I'm a delegate for Nexus within the Safe ecosystem, so I serve as a guardian, and it's just been incredible to see what protocols Safe are doing. What a lot of these other protocols in DeFi are doing. So part of my job is getting to keep up on that and look at all of that. I think I've shared with you guys before, and I think people can see on my Twitter. I put together my State of DeFi Yields report, which I put out on Mirror every week. And it's basically just all the stuff I'm already doing at Nexus, but I just write it up and provide like my view of where the market is and where different yield opportunities are, where you can buy coverage. And that one is always fun, but I think it's just fascinating to see like the direction things have taken in this cycle. One thing I've said in my reports, which in all of my time in DeFi, I think this is the first time where interest rates on chain really aren't being driven by incentives. It's like natural demand for leverage and natural demand for things. And maybe not direct incentives, but a lot of it is like the liquid restaking token craze and like this points economy that's emerged, which has also been fascinating to see different protocols taking off. So, I mean, if you want to check out that report, you can find that on my Twitter. But I'm basically summarizing all the stuff that I'm sleuthing through and looking at for the mutual, anyways. But on the Nexus side, there's a lot there. There's a lot to catch up on. If anybody has any questions about that, feel free to reach out to me on Twitter, reach out to me on Discord. Happy to answer questions about the mutual. And there's a lot that's coming that we'll be able to announce in the next couple of months as well. So I wish there was more alpha I could share, but mum's the word at the moment.
A good reason to have you on again, huh?
Yeah,
Exactly.
and I can only recommend our viewers to read your newsletter, because if you appreciated the roadmap quality of writing, then you know that this newsletter is at least as good, because it's just really good content. Congratulations on that work.
Thank you. If you're a fan of reading long things about DeFi, I'm your guy.
That's an instant follow from me. I love it. Yes, I love.
By the way,
I love
I want to add one small thing. Cyril,
Yeah.
you are the one that started the integration there?
Not exactly. To be completely honest, I didn't do anything. Actually, I've been in touch with Token Logic for the Go FX USD strategy, and I believe you've Brave New DeFi been in touch with Token Logic as well, and he connected us in some way and just popped that we were integrated into Nexus Mutual.
Yeah, he found my newsletter. He was reading that, and I've worked with them in the past. But he found my newsletter and was like, "Hey, you cover FX protocol?" And I was like, "Yeah, we just listed it." And so then from there we got to talking and everything. And yeah, so I'm the one that got FX protocol listed because I found it and thought, yeah, this is a thing we should cover.
And you didn't tell us in the first place. That's crazy. This is such a good news.
Yeah, it's always trying to find like a contact, right? Like which animal do you reach out to on Twitter, or where do you reach out to somebody? Because there is there's Twitter and Telegram and Discord and Lens and Farcaster and all of the things, right? There's like so many things. So where do you reach the people? Decentralization in all things, even social channels where you reach out to folks. So
yeah, that's right.
Oh, man. That's right. It takes me longer to share the stream on all platforms, and all of a sudden the conversation ends.
It does it. Who would have thought, if anyone's familiar with the US version of The Office, who would have thought that Wolf would have been a thing that you would actually yearn for at a certain moment in time, where you could send out like one tweet and it went out on every single platform at the same time?
Yeah, man, that's some cool stuff.
Yeah.
Oh, well, man, Brave New DeFi, we're about ready to wrap this up, to be respectful of your time and our viewers' time as well. But it has been an absolute pleasure having you on today, educating us on all things Nexus Mutual. We're looking forward to continuing our journey of learning about Nexus Mutual and ways that we can apply it to our FX protocol investments, and looking forward to seeing your roadmap develop as well. It sounds like you guys have been around a while, and you have a very bright future planned as well. And so I think FX is definitely looking forward to being a part of it and the entire Aladdin DAO ecosystem. So everybody, thanks for joining today. It's like I say, it's been a pleasure. It's been a joy. I've learned a ton. I did not even know this amount of coverage for DeFi products existed. So this has been very eye-opening for me, and I really do appreciate it. DeFi Advisor, Crypto Prophet, Cyril, guys, you make this super easy. Thanks so much for being here and being such a great host for our guest, Brave New DeFi.
Same, man. Thank you for another great job hosting. Really enjoyed it. Cyril, Prophet, always fun. And Brave New DeFi, really nice to meet you, man. We're gonna have to listen to this one again to make sure I really got all the info correctly, because there's a lot of interesting stuff there on a topic that we don't talk that often about, to be honest. But I think that we all probably feel the same way, that okay, we should get we should get educated a bit more about crypto insurance and its opportunities, and the best place to start seems like Nexus Mutual, to be honest.
Yeah, thank you very much for having me. This has been great. I always love talking about DeFi with other people who love DeFi as well.
Yeah, I was gonna say you can call me a degen all you want, but we're like, how did you find us? Oh, I found you on Chain Sleuthing. It's like these are my kind of people. So I really liked having you on, and yeah, thanks for everything. I think Nexus is gonna do great in the future. And I think the maker comparison is also interesting. Like maybe there's some complex back room basically and some simple front room in the future also, or like, yeah, I don't know. It's interesting. Thanks.
Absolutely. Cyril?
Yeah, thank you very much for having me, and thank you for joining us so quickly to this space, Brave New DeFi. I'd like to just add something for our viewers. If you enjoyed as much as we did learning about Nexus Mutual, feel free to follow Nexus Mutual, Brave New DeFi, and the A team for more content. And of course, feel free to retweet this space and spread the word about our the A team, FX Protocol, and Nexus Mutual.
Man, what a pro. Look at that. All the good plugs right there.
He's
I just
smarter.
thought of it.
Damn it! I told you he was smarter. It's
I
simple.
just thought of it, but we should do it in the beginning as well.
He's ahead of the ball game. He's definitely making us level up. So much appreciated, sir. All right, everybody. That's all we got time for today. We thank you for joining us. And if you missed a portion of it, it's been recorded and is available on our YouTube. And the X broadcast will be available on the A Team account. So thanks again, everybody. Thanks, Brave New DeFi. Look forward to seeing you guys next time around. Bye, everybody.
See you. Bye.